everybody. Welcome back to the Wealth Advisory's Top Stocks. We are on, as you can see, to May 2025, almost halfway through the year here. By the time you get this, as Justin Timberlake might say, it's going to be May. I couldn't resist. I'm sorry, guys. I couldn't resist. It's been a crazy year, so, you got to keep a sense of humor when you're going through stuff like what we're going through. Worst start of a presidency for the stock market since Richard Nixon. I read that recently. That's a heck of a feather to put in your cap. But we do have still 60 some odd days worth of paused tariffs before they come back or they don't come back. Rumors on Wall Street are that the Treasury Secretary and the head of the Federal Reserve have been having lunch dates for the past couple of months, and that Jerome Powell may be getting closer to cutting rates. It looks like markets are kind of betting on that. They've turned a corner. They've started to head up. We had like four green days in a row, which was, more than like this whole year, practically more than this whole year combined. But yeah, so, it's like I said, back when markets were really crashing, we were talking about, how markets go through a correction of 10%, give or take, every year. They go through a bear market, every few years. This is all just part of the natural cycle of the market. And the way that you outperform the market is by buying when everybody else is selling, buying when it's low, buying when we go through a correction. So hopefully everybody took advantage of those low prices and did some buying. We had some great stocks last month, and we had some rough stocks last month. I actually took the prize of having both the best and the worst performer, I think. Anglo Gold Ashanti was up a bunch as everybody fled to gold. It's pulled back some as people are starting to put money to work in some of those more beat up sectors. And Prairie fell a lot more. They really, sandbagged me there. But the company's been coming out with some really good information. I'm going to cover that later on. It's actually one of my picks this month again. I'm going to give them another chance. I definitely think they can recover. They were up, the day before we recorded this, they were up a good 12% on the day. They released some really good news. But yeah, like I said, markets were a little bit uncertain, and our performance last month shows that. Markets all finished pretty much down. I want to say the NASDAQ was up a tiny bit, basically flat. The VIX was up like 16 or 17% over the course of the month. So if you bet on that, good job. If you didn't, that's okay, because the VIX is kind of tough to bet on. There's not many long-term ways to bet on it, and we are long-term investors here. But anyway, with that, let's get into our short-term investments, sort of, so to speak. With our top 10 list, we're going to go through our first 4 picks here, and then we're going to cut it off for those of you who are watching on YouTube, because this is a service that we provide for our paying subscribers. We don't think that it would be fair to give away something for free that they pay for, but we will continue to give you the top 4 stocks here on YouTube as long as you want to watch. We just ask that you give us a thumbs up, subscribe to the channel, hit the bell to make sure that you're notified when we post new content. And if you want to get the rest of the list, plus all of the other things that come with being a member of the Wealth Advisory, we'll put a link to a discounted membership in the description below the video. Just click on that. Honestly, the gains from Anglo Ashanti last month could have paid for your annual membership. So there's a lot that goes with it. You get weekly updates, monthly issues, new stock recommendations, all the research reports that we've ever written, just access to a lot of valuable data other than just the top 10. And, the top 10 is honestly worth the price. So now, with that out of the way, let's go ahead and get started. And I'll kick things off as I always do with my first pick. It is Centrus Energy, ticker symbol. I didn't grab my pen yet. LEU. For low enriched uranium. We added Centrus because Centrus is the only company in the country that has a license to produce high assay low enriched uranium, which is the kind of uranium fuel that these new generation of small modular reactors are going to work with. Everybody's really excited about the small modular reactors. Centrus ran up really big with a lot of other nuclear stocks. The nuclear stocks kind of picked up on the AI wave, really, because AI requires tons of energy, and nuclear power could provide that energy. Unfortunately, it takes like 10 or 15 years to build a traditional reactor, and we don't have any small modular reactors yet. So, reality set in, things have pulled back. But the thing is long term, this is definitely an industry that you want to be in. Centrus is going to be a key player in it. They currently produce most of the uranium fuel that the U.S. uses. or not produce it, they enrich it, I should say. They're not mining it. That's Cameco, one of our other plays, mines it. But they're producing it. They're helping keep our nuclear reactors running. As we fire up new reactors, they're going to be producing more of it, selling more of it. As we get closer to this SMR stage, they're going to be signing more and more letters of intent and more deals to provide the high assay, low enriched uranium to those companies that are making the SMRs and running the SMRs. And just right now, I think it's a really good time to get in on it. Shares pulled back. Like I said, they were riding this AI wave. Nuclear stocks kind of became AI stocks for a little bit. They're not AI stocks, but they are good long-term investments. And so with that, I'm going to make Centrus my first pick for the month. And I'm going to pass it off to Jason here.
All right.
For his first pick, which is equally exciting.
Yeah, well, we're buying on the dip here. As you mentioned, sometimes you want to buy these stocks when they're down. And Northrop Grumman, obviously one of the world's preeminent defense contractors, had an absolutely abysmal earnings report. Revenue was down 49%, mostly due to manufacturing cost overruns on its B-21 bomber program. This is the next generation stealth bomber. So the stock tanked on that, lost 10 to 15% of its value, depending basically on where you look and where we're at finished. Now it's actually come back a little bit because people are already coming in to honestly buy this dip. And it makes sense because, one, we saw this actually happen in the fall. Back in October, Northrop took another basically billion-dollar-plus charge on the B-21 program, hurt earnings. At the time, it was trading for about $540 for a share. With that and some other news, it ended the year around $450. But within the first 3 months of this year, we were already back up at $540 per share. Now, with this earnings report, we're back down around $450. So this is kind of that floor where you want to get in on a stock like this. And we've done this before. There's a lot of precedent, not just with Northrop Grumman, but a company like RTX, which we recommended. There was a product recall there with RTX, knocked their stock down below $80 per share. It's about doubled in value since then. That was back in 2023. Now, about a year and a half later, stock's doubled in value. Lockheed Martin's had similar issues. Remember, their F-35 program, notorious for cost overruns and delays, and yet it's still gone back up. The stock still has continued to rise. It hasn't stopped Lockheed Martin, RTX, any of these other companies, especially when we look forward and we know we're going to get something close to $1 trillion defense budget for the next fiscal year, and we got major defense initiatives like the Golden Dome. We still have military operations out where we're fighting people out in Yemen, trying to keep shipping lanes open up there, having things go on. So we're preparing for China Pacific too. So there's a lot of defensive money coming. The defensive contractors are going to continue to make money. So when you get these dips, that's when you want to get in on. It's how you make the most of the capital gains on them. It's how you make the most of the dividends they pay. You get at the lower share price, you lock in a higher yield on the dividend. And like I said, Northrop Grumman, one of these companies that are involved in so many defense projects, so many big-ticket U.S. defense projects. One of the big five, obviously, defense contractors. You can pretty much bet that they're going to bounce back from this, that their next quarter will look better, that their full-year guidance will be better, that they will turn this around. And so I definitely have Northrop here for a buy-the-dip situation.
Definitely. And you have been right every single time on these buy the dip situations.
Honestly, it's easy money. They're huge companies. Their revenue's baked in through the Pentagon budget. So when they have a setback, you just seize on that, and then they'll just do the rest.
Yeah, I mean, you said it, $1 trillion defense budget, and we've definitely got an administration that is taking threats from China very seriously.
Mm-hmm.
I think you did an article about it last week, maybe the week before. I followed up on it to my Main Street Ventures subscribers about the war games that they played out. It was a hypothetical war game because obviously China and the U.S. don't participate in war games together, but we lost.
Oh, yeah. Well, I mean, there's been a lot of heat actually in the Pacific recently because also China's been harassing Australia. They sent an entire little mini flotilla of ships around all of Australia. They've been nosing around their undersea cables that provide internet for the country. They obviously are always conducting military drills around Taiwan. They conducted the live fire drills around Australia. A lot of it's, a lot of power projection coming out of China right now.
Yep, definitely is. And Northrop Grumman helps us project that power back.
Yeah, they're going to be, one of the leaders when it comes comes time to ramp up defense spending, which is here.
For sure. And in another buy the dip situation, maybe surprising you guys that I don't know why I just passed that back. I needed to pass the slide over. Apologies, guys. It's been a long week already, and it's only Tuesday. But this is another buy the dip situation. You guys may think I'm crazy, but the company is executing really well. The stock is just not picking up on it, and it's Prairie Operating Company, ticker symbol PROP. And so Prairie came out with a bunch of news over the course of the past couple of weeks. So I've told you guys about their hedging program. Basically, they were able to sell about 85% of their total daily production forward at prices that at the time were right around where oil was trading, but now are higher than where oil's trading because oil's been falling. And so they made an announcement last week that their hedging program is something like $70 million in the money. Basically, they're getting $70 million for that oil, $70 million more for that oil than they would be were they just selling it on the open market. So I think that was a really impressive bit of foresight for the company. They set this up. Before their Bayswater acquisition, so they set it up before they were producing tons of oil. Now they're producing a lot more. Just yesterday, they came out with an announcement that they have started the construction for the completion of one of the well pads. I want to say it's an 11 or 12 well pad that came with the Bayswater acquisition. So that's going to add to their production. That's going to add to their hedging program. That's going to add to how far they are in the money on that program. The company's just growing. They're doing everything that they should. They recently filed a mixed shelf offering for $500 million. The deal is that basically, they've got $1 billion credit line from Citi. They utilized about $400,000 of that, give or take, for the Bayswater acquisition. So they've got $600,000 left from Citi. With this $500,000, that's potentially $1.1 billion that they can put into more acquisitions. And we know that Civitas wants to leave the area. We know that Prairie has locked up a lot of capacity on the pipelines, leaving the section that they're working in. So all of the smaller companies there, they really can't grow. And if they can't grow, then they're likely to want to sell. Prairie has sort of set the price in that region with its Bayswater acquisition, where they were able to buy that stuff at below market price. So really anybody who wants to sell kind of has to sell at Prairie's chosen price. And Prairie's one of the few operators there that can afford to buy it because they have a clean balance sheet. They have this cash. They have this cash line from Citi. They have their mixed shelf offering. Where they can sell up to $500 million worth of stock to raise more money if they have to. They really just have everything lined up. The market has not been appreciating what they're doing, but I really think it's going to turn around. So this is one of those situations where we're buying on a dip, we're adding to that position, and we're expecting this great operation and the good performance to catch up with the stock. All right, and so next up we'll have Jason's next pick. It's a good one for the season, I think.
It is. I always like to talk about this one this time of year, Scotch Miracle-Gro SMG. We get those Mayflowers coming in, and Scotch Miracle-Gro is going to be a big reason why. People's gardens are looking nice. And they just hit a nice little watershed moment here because they finally unloaded their cannabis subsidiary, Hawthorne. We've been anticipating this for a long time. They've been trying to unload this the subsidiary because it was focused on marijuana. And the thing about cannabis is that it's made a ton of progress at the state level over the past 10 years. We've seen all the states legalize it medically, recreationally. No traction at the federal level. We have been stuck with it being scheduled what it's scheduled as a drug. Banks really not being able to touch cannabis industry. Scotch Miracle-Gro also they really didn't do themselves any favor because they weren't super familiar with the industry itself when they got into it. It just seemed like a natural fit for them at the time, and I kind of get that. That makes sense. You're thinking, here we are. We're a fertilizer company. We're a company that does gardening, and we're going to do well. And a new plant hits the market, right? Mm-hmm. So you could see where they were going with it. It just didn't pan out. But now they can finally close the book on that. They can finally close that chapter. And I like the upside here. The stock's down a little bit this year, but its earnings are projected to double over the next 12 months. And what I really like about Scotch right now with its price point, it's yielding about 4.9%. You can go ahead and round it up to 5 if you want. 5% yield is terrific for a company like this. this is a pretty steady business overall. You can talk about lawn care and garden care and stuff like that. You probably see the commercial with Martha Stewart and all these things. Like, it's a steady business. It's something that's pretty reliable. There's going to be a floor there. And so when you're able to get a stock like this at a discount and take advantage of the yield, it's always a great time to buy. And especially because, talk about over the past 10 years, basically, this dividend has grown from $1.75 to $2.64 over the past decade. That's 4.2% per year dividend growth. And like I said, if their earnings continue to improve, which they should now that they've kind of unloaded this albatross of a cannabis business and kind of get back to basics and put more money into advertising, more money into promoting retail sales, getting back to their core business, their earnings are set to improve. And that yield is right there. I like, in terms of capital gains, you're talking about a company stock right now, it's trading in the 50s. The stock probably could get up to around $70 per share in the next year or so. So you'd be looking at, maybe a 50% gain on this in the next 12 months if you got in now along with that 5% dividend yield. So it's not just a seasonal fun play. It's not just because, I'm waltzing by the tulips here on my way to work. It's, because we have a really great buying opportunity in Scotts Miracle-Gro right now.
No, I definitely agree with you there. I mean, the company has just they've executed so well since they decided to do this turnaround.
Yeah, the transition's been a long time coming. I mean, it's been hard for them to kind of unload these assets because again, the entire cannabis industry has struggled with oversupply, with banking regulations, with all these things. So trying to unload the businesses that they bought at kind of that height of the cannabis boom when everybody was really, really excited about it, that became a little bit more difficult. But they're finally kind of really, like I said, you really kind of put an end on this and close that book and just get back to what it is you were doing. Because what it is you were doing was, a very, very easy business to understand and operate and function in, and they have a dominant position in it.
They do. They definitely do, and locking in that 5% dividend.
Yeah, that's a huge
The
opportunity.
yield
right now.
fluctuates with the price, but when you buy it, you lock in that yield on cost. So,
right, and if it's
5% forever, and if they keep growing it,
by more than
goes up to
4% a year. I mean, so
Uh-huh.
that's strong dividend growth.
That's great. That's the kind of company you want to buy. All right, guys. So those are our first 4 stocks. Let's do a little recap here, and then we're going to cut stuff off for those of you watching on YouTube, and we'll continue for our full subscribers, our members. But here we go. Let's go for our recap. I've got Centrus Energy as my first pick. Like I said, long-term nuclear power is gonna continue to grow. It's gonna take some time. It takes years and years. It takes like a decade to build a reactor. We're still working on getting small modular reactors out there. But Centrus Energy is the company that's going to be powering them. Centrus Energy is one of the few places, one of the few domestic places you can invest in uranium, and definitely one of the stocks that's going to see a lot of the profits as this industry grows. Next up.
Yeah, Northrop Grumman. If you see a defense major like Northrop Grumman down 10 to 15% on a single earnings report, buy that. I mean, that's an evergreen sentiment from me, the defense guy. Like, these are your best opportunities to acquire these expensive stocks, and I mean that by terms of, like, you look at this company, it's running $450 to $550 per share. If you really want to maximize the money you're putting into them, buy on these dips.
Yep, definitely. Every time. He's been right every time, guys. I highly recommend you take this advice. Next up, Prairie Operating Company had a really big dip, but really, like, the management is operating this company really well. The market just hasn't picked up on it. They've got their hedging program that's in the money. They're one of the few companies that can afford to grow. They are growing. Their cost of production is far below where oil prices are now, even below $50 oil, which, it seems unlikely that we're going to get below $50. So as long as it's above $50, these guys are making money. They can grow. That's going to translate to the share price eventually. And next up.
Yeah, Scotts Miracle-Gro, not just a seasonal play. I love this medium and long term. I think, like I said, we're looking probably about 50% upside over the next 12 months. And then while you're waiting, you get that 5% dividend, which, as Dubs, kind of alluded to, if interest rates do go down, that yield is going to be all the more impressive because, you're not going to be seeing any more of these 4% high-yielding savings accounts or things like that on a lot of what the banks are typically going to pay you. So you get the yield while you wait for the capital growth, which is imminent.
Right, and on top of that, you've got Scott's record of raising that dividend, so you're probably going to see your dividend payments come up too.
Over the long haul, for sure.
Well, there you go, guys. There's our first 4 picks. For those of you watching on YouTube, this is where we say goodbye. If you want to become a member and get the full top 10, the monthly issues, the weekly updates, everything else that comes with it, there's a link to a discounted membership in the description below the video. I highly recommend you take us up on our offer. But if you don't, we'll continue putting out these first 4 picks for you for as long as you want to watch. We just ask that you give us a thumbs up if you like the video, drop some comments. Oh yeah, somebody commented last month that they don't like my YouTube style and that they would prefer to have things written. And so I would like to tell you personally that if you sign up for a membership, members of the Wealth Advisory get all of this stuff in writing as well as the video. So there's an incentive. And more comments, guys, because I'm going to talk about them. You know, you'll be famous. So more comments, thumbs up, give us a follow, hit the bell, and make sure you get notified when we put out more content. And, you know, as always, thanks for watching. Have a great month.